Welcome to the Real Estate Investing Morning Show with your hosts, Wayne and Gabby.
Hey, good morning.
Good morning, real estate investors, and welcome to the Canadian Real Estate Investing Morning Show. You know, raising capital is an important step in scaling your real estate portfolio. But what if your investor decides somewhere along the line, somewhere along the way, that they don't want to do the deal with you anymore? That is a question that was sent in by an investor listener last night that we're going to be covering on today's show. And we are also, just in case you didn't know, we are broadcasting live on YouTube right now, as we do every weekday morning at 7 a.m. Mountain Time. And anybody else that's joining us live here on YouTube, if you have any questions, let us know, put it in the chat. We'll answer those questions for you. We provide free coaching for real estate investors across Canada every weekday morning. All you got to do is just wake up, get out of bed, quit being lazy, and bring your questions.
Yeah, we have people starting to come into the live show here. Kirsten's here, says hello, all you beautiful people. Kyla's here with us, says good morning.
Kyla's here?
Yeah.
Where was Kyla last night?
Ooh, good question. Where were you, Kyla?
Where were you last night?
What's your excuses?
Manny's
here, says good morning, everyone.
Kyla skipped out on last night's weekly coaching session for the REM Masters Mentorship Program we have on Tuesday nights. So, I saw that you weren't in class. Don't think that you can just skip out and I'm not going to notice.
Manny was there, though, with his cute pup, Nova. Yeah, had a little lap dog with him.
I haven't seen Nova in a while. Actually, I missed him last night.
Well, also what happened with the Nova videos? Like,
yeah,
we used to get more Nova in our lives. What happened?
Expect more out of everybody.
I know. Gosh,
you two
so
in particular. So I'm really excited to be getting into that question in just a little bit here. But since we're on the topic of last night's coaching session, what a great coaching session.
It was.
Tons of different topics.
Yeah, actually a really good variety of topics. Sometimes you see themes, like you kind of see like a whole bunch of the same, not the same people, a whole bunch of people going through the same kind of stuff. And it's like kind of like almost theme based. Like you can see that there's like, the same stuff happening. But this was like, lots of very different topics that we got to dive into.
Well, we have two. There's two that kind of matched. We have two students in the REI Masters Mentorship Program who are building a wholesaling business from scratch. So both of them are working very diligently. Big shout out to Nori and to Kane for working really hard and building it right. Yeah. And one of the things we talked about last night was obviously, we talked about ethics on yesterday's podcast, which was a really good tie-in. Yeah. But we talked about some of the legalities of wholesaling and what you can do and what you can't do. And there was actually something that came up last night where we had to talk about something that you can't do in wholesaling. Yeah. And we dove into that. So that was really good. And it was a good lesson for many other people as well, other students that were there and listening, because you want to make sure if you're doing wholesaling, you want to do it right, and you don't want to get caught in the gray area because, well, you could potentially get fined.
Yes.
And you don't want to get fined, and you don't want to do anything that's illegal. So we got into that, and then I was just looking through the other stuff we talked about. Rent to own. We have another student who's building a rent to own program. She's doing fantastic. Big shout out to Tammy.
Our students are so cool. Our students are so cool.
Yes. Yes. I was going to make a joke, but there's no need to. Tammy, you're very cool. That's the point.
All of them.
Yes. But yeah, talking all about like so many different things in regard to the whole rent to own process and qualifying tenant buyers and
advertising.
And advertising, yes, absolutely. We were doing, back on the topic of wholesaling again, we were talking about how to negotiate with off-market sellers, how to make sure you get the price that you need. And it kind of tied into yesterday morning's podcast about like not just taking from somebody else. It's all about establishing or finding value in a deal, finding value in a transaction that you can benefit from that maybe doesn't benefit the other party. And not just focusing so much on the money, the monetary value. Because if you just focus on money, then this is my price, this is your price, and then you just kind of go like until somebody something gives. I don't like negotiating that way. I like to use my skills, not in negotiating and manipulating someone into getting the best price, but my skills of being able to find value to make the deal work for me, so that I can give the other party exactly what they need as well. So we can create win-win transactions and win-win deals. So we talked a little bit about that, and then we talked about garden suites.
Yeah.
A big discussion about garden suites from start to finish, how to go about, the numbers in garden suites and building them in Edmonton. How much does it cost? How to get financing, holding costs, all those things. And then lastly, one of our students is dealing with a tenant who is a bit of a collector.
Nice way to put it.
Mm-hmm.
Yeah.
But what I liked about that is, and you handled that discussion, because you were much better at handling the delicacy of that situation, because this wasn't someone. There's a little bit more in collecting. This was a hoarding situation, and this hoarding situation was turning into a health standards situation. It was turning into cleanliness, which was turning into, concern about the property and concern from other tenants in the property who are concerned about the cleanliness of this and the smells. Yeah. But there was an underlying potential issue, which may be that there could be some, what's the word I'm looking for?
I'm not sure. I don't know where you're going.
Mental health connections to it.
Mm-hmm.
And you really want to be cautious and delicate with situations like that. It's easy for you to just, walk in there and storm through, open up the door and say, clean up your shit. Yeah. Otherwise you're out. Yeah. But is there underlying issues there that we might need to address, or perhaps be more considerate of and sympathetic about? Yeah.
And also, I love that there's an opportunity for us all to discuss, that business is business. You need to do what you need to do to protect your business. But at the same time, there's things you can do, like help find supports for tenants who need supports and those types of things. So I love that we have a community where we can come together and say, okay, yes, we have a problem that needs to be dealt with, but also, it seems like they might need help, and how could we help find the supports that they need to help move this along so that they get what they need and we also get what we need, right? Mm-hmm. It's not just putting the hammer down and kicking them out, right? So.
Yeah. And that's what I love about the REI Master's Mentorship Program. I love what we built, and I'm not afraid to say it. I know it sounds, might not sound great, but it's
a selective community of people who care and want win-win and are ethical and are empathetic and yeah. Do you want me to keep going?
You can. But I also wanted to say that the way that we built it was very, very specific. And obviously when I was building this out years ago on how a program that I believed would actually end with results from our students and actually getting to where they want to be, and not building it like everybody else builds it, or not building like it was built before. What I wanted to be able to provide our students, investors, with everything that they need. And that starts with a clear plan. It starts with a clear plan of okay, what is it that we are trying to accomplish, and what do we need to do today in order to make sure that we keep working every single day towards that goal, and making sure that we're not taking any days off, making sure we're not getting distracted. One of our students last night, I even said it. I said, you're getting distracted. You're getting off track. Get back on track. And though I know that I understood the situation, but it's all about making sure that you stay on track for what you're supposed to be working on. And that could be a little discouraging. It could be a little confusing for people in any journey, when you have this long, ambitious goal over years or decades, and you just don't know what I need to do today. And so what we build it out in that fashion, reverse engineering what the goal is, and we tell you literally what you need to be working on right now in this moment. And then you have all the resources and the courses and the support from us to be able to make sure you get those things done. And sometimes, you know, it could be it could be a little discouraging in that respect too, because you're like, well, why am I doing this dumb little thing? I'm trying to get to here. And sometimes you just need somebody who's already been there, who has more wisdom than you, just to be able to just to say, shut the fuck up and do this, and I'll tell you what's next. You know what I mean? Just so that you can stay on track and get the things done that you need to get done. And so we built it this way. It works, and our students are getting success. And and when they're focusing on that what seems to be like a tiny little task that it's meaningless, when they're stuck on it, they can come to us. They can ask any questions any time of day. We answer their questions. And then if they need additional help with more context, every week we can sit down with them and we can work through it to make sure that they get it done. They can get that thing finished. Then we can give them the next thing. And then they're constantly moving forward, as opposed to sitting in some holding pattern trying to figure out what I'm supposed to be doing. And what ends up happening is people sit in holding patterns. They're like, oh, this shit doesn't work. And then they go and they change their mind. They try something else. And then they never reach their destination. So I'm very proud of what we built, and I'm very proud of everybody that's gone through the program that has actually found success in it because they've done the work. And we have a phenomenal squad of real estate investors that we're working with right now.
Yeah. And
so many of them have renewed recently too.
Yeah.
Like, I think we had more renewals this year than we've had in any previous year.
Yeah. Oh, 100%. You don't think that's a fact. Yeah.
And there's different reasons for people choosing to renew or not to renew. Some people, you know, maybe they decided that there's a lot of people that decide real estate investing is not for them. But then there's people who are like, okay, I got what I needed, and I think I'm just going to kind of pick away at this for the next little while. But the people that we have in, like I said, right now that they're teaching are just so incredibly dedicated. Yeah. And it's not about how fast or how many properties they got in a short amount of time. It's about what they're doing to help them reach their end goals. I'm so proud of the people that do all the work they need to do and then continue to renew, because they know that, okay, there's still a million things I don't know. There's still a million things that I need to do. And I have this support to be able to help me to continue on this journey. So shout out to everybody. And apologies to Kyla. It appears that she had family... Oh, maybe? No. Nope. She had her own baseball finals last night. She didn't say whether she won or lost, though. Please let us know. Now I'm interested to know.
Last night and Thursday, so that sounds like last games of the...
Got it. Well, that's... Hey, life is life. And I know that everybody has things that they commit to and things that are important to them, so that makes total sense. And she says even in the chat here that... I can't see where. Oh, bonus, I get to watch it still. So yeah, we record all of our coaching sessions so she can go back and watch it. And I know that Matt might even be here, and Matt works on nights, and sometimes Matt can't make it to coaching sessions, but we record them. And anything that he has, he needs us to go through, he can always just let us know. We can go through that topic for him, and then he can watch the recording afterwards. So all the coaching sessions since we started are all recorded in the Master's Vault. So there's like hundreds of hours worth of free coaching in there. So you can even search by keywords for topics that you're interested in. But I digress. I'm just really proud of it. I'm really proud of it, and I'm really proud of everybody that's in our program right now. And one last thing, a big shout out and congratulations to Rupinder and Jazz, who got an accepted offer on a new cash flowing rental property this week as well.
Congrats, you guys. Whoop.
All right.
I didn't get a chance to, you kind of just hard stopped. There's some people in the chat having some conversation. I didn't get a chance to say good morning to Francis. Did you just say last night that Francis got tickets to the bus tour, or did I make that up?
St. Francis? Yes.
Awesome.
Yes.
Looking forward to seeing you.
Stacy, are you coming?
Good morning, Stacy. Stacy's here. Yeah.
Stacy, remind me to message you.
Okay.
On my list. Okay. Remind me to message you.
Anyways, good morning, everybody. Thank you for joining us.
Yes.
Yeah. And if you're here, please say good morning, because we don't know you're here unless you talk to us.
Well, you brought up the bus tour. So we have our Edmonton Real Estate Investing Masters Edmonton Bus Tour coming up on August 22nd, which, by the way, very soon. That's 2 weeks.
Yes.
Does that mean 3 weekends from now, I guess? I think that's right. 3 weekends from now. But anyways, that's coming up very quickly here. And I mentioned this, saying that, hey guys, like I didn't do very much advertising because I know it was going to fill up and I wanted to give everybody an opportunity. And then the first like real, like kind of like day of like advertising, which wasn't very hard advertising either.
Didn't you just post the event?
Yeah, I posted the event in the most nonchalant way, and I put up a story, and then suddenly now we're at like 75-80% sold. Like there's not many spots left. I think there might be like 10 left, if we're lucky. And I told our students last night as well, like, guys, it's because it's a family, so it's a family-friendly event. The Edmonton Real Estate Investing Bus Tour, hosted by REI Masters. So when somebody books it, they book like 4 tickets because they're bringing their kids, and we really try our best to make it as family-friendly as possible. I actually, not gonna lie to you guys, I'm thinking more about the kids during the event than I'm thinking about providing value to the real estate investors.
That's
I know
not
the
true.
value is already there. No, that is true. I'm trying to make sure the kids are having as much fun as possible because I want it to be memorable. Austin, for example, Austin's daughter, Montana, thank you. Absolutely loved it, and they couldn't wait to come back for the next one. Yeah. She can't wait to come back for the next one. That's what I want.
If they do this again, can we come back?
Yeah. You know what I mean? Kirsten brought her kids last time, and they had a blast.
Yeah.
I want them to want to come to these things, because then you can bring your kids, obviously, and you're not dragging them along. And also, that's just like memorable moments for them. You know what I mean? Oh, remember when we did the bus and we looked at the houses and it was so much fun? Like, that's what they're going to remember from, experiences in their childhood. Mm-hmm. And it's going to normalize real estate investing. And I know how hard it is, and everybody wants their kids to follow in their footsteps and to create a better life for themselves, and because you're doing it for them, right? And you want them to make good decisions too. So this is your way of kind of exposing them to it and normalizing it for them, because it wasn't normal for you when you grew up. So that's what I want. I'm doing that for you guys. And I'm also doing it for my child and making it fun for her, because she gets dragged out to a lot of these events and sometimes she doesn't want to. So at least she's having fun. So it's really important at our events. We try and make all of them as family friendly as possible so that the kids can come out and it normalizes it for them, because that's who you're doing it for, right? Mm-hmm. And maybe, just maybe, they'll be a little appreciative of it, in their later years as well, for everything that you did for you and your family and for future generations. So now the actual event is us touring real cash flowing real estate properties in Edmonton. And again, that's on August 22nd. We get you on a bus. We take you to properties that are real, that we own, that our students own, that other people own. We're not just like going to, listings, real properties. And we go through the numbers. We talk about how we bought them, why they're amazing deals. We talk about the return on investment. We talk about the cash flow numbers. We talk about the potential for the property and the upside, the value add components of it. Talk about everything, so you understand that these deals exist, so you know exactly what you're looking for if you're out looking for deals in Edmonton or whichever city. So a tremendous opportunity to go out and actually see real deals, real numbers from real people, us included. Mm-hmm. One of the stops is going to be one of our multi-unit garden suite developments. And I've decided that for those of you guys that were at the last one, we're going to be going back to the same one that we were at before. So you get to see the next stage of development in it. And there's going to be cabinets, and there's going to be other things. I don't know where it's going to be at, because there was a couple delays with the rain. But you're going to see the next couple delays. Yeah. You're going to see the next stage of it, so you guys can see the whole development of this actually happening. So if you're interested in multi-unit garden suites and how to add those to residential properties, a tremendous opportunity. And one of our students, I know for sure, we still have one spot left that we're still just finalizing right now. But another one of our students is going to be hosting as well. Just picked up a brand new cash flowing rental property. Tremendous cash flow on this, and you're going to get to see how they put that together. So, if you guys want the last of the tickets, go to reimasters.ca. Get your tickets. It's under the events tab, or reimasters.ca/Edmonton Bus Tour. If you guys have any questions, feel free to reach out, email us, and we'll help you out with that.
If we sell as many tickets today as we sold yesterday, we will probably sell out today.
Yeah.
So let's just put it that way.
Yeah. Oh, it's like I feel like I should advertise so that at least people know that we're doing it. But like this is one of those events that just sells out like that, and I'm not getting a second bus because second bus means less quality. Yeah. I want a small group of people so we can have that good conversation, so you can ask all your questions and get them answered. You get the most value out of it. Yeah. Yeah. So anyways, that's coming up August 22nd. Now, maybe, just maybe at this tour, you might learn a thing or two and decide, hey, I want to buy a cash flowing rental property like this. Or, hey, I want to build my own multi-unit garden suite in the back of my residential lot. But maybe you don't have the money for it. Maybe you're struggling with that down payment. Maybe you're struggling with the renovation money, something along those lines. And you realize that, okay, if I'm to really scale up and to continue to keep building my real estate portfolio and taking it to the next level, I'm going to need partners. And it appears that's what this investor is dealing with right now. This investor is at that stage. They are coming to that realization that joint venture partnerships, raising capital from other investors, is inevitable. And this investor sent us an email asking for some help with situations where maybe an investor might back out. And if you guys have any questions, I'll just say very quickly, you can email them into info@reimorningshow.com. When we come back from the break, we're going to read this listener email and we're going to answer this question and provide free coaching for them and for you. So just don't change that dial. We'll be right back.
Real estate investors need to treat debt differently than homeowners, and at Kirkland & Brennan Mortgage Group, we understand that. For the last 11 years, we've helped real estate investors plan and build their portfolios. We understand how to help you avoid fees, penalties, getting yourself stuck, and making sure that the deal you're doing today doesn't stop the deal you want to do tomorrow. You can reach out to Keaton, Keaton, at kbmortgages.ca. Put plan on the subject line, and we'll help you build a plan and then realize it for your real estate goals. We also coordinate with the other professionals like your accountant, lawyer, realtor, and we will help you build your portfolio. So reach out. We'll do our best to help. Thanks, guys.
You've got showings, lease signings, suite renos, condo board meetings, credit checks, mortgage financing, and every so often the tenant clogs the sink because they shoved macaroni down there. Stop. Breathe. Leave the bookkeeping to Fingo. Fingo is specialized real estate bookkeeping by real estate investors with tailored services for maximum returns. Save time. Enhance your returns. Claim the plumbing repair for that ridiculous macaroni fiasco. Book your free consultation at fingo.com.
Summer. While everyone's getting distracted, this is when the market gets quiet. Not because the opportunities disappear, but because the people do. Vacations, long weekends, these are the distractions I'm talking about. And that's exactly when serious investors make their moves. At Calvin Realty, this is one of our favorite windows. Less competition, more flexibility, and sellers who are actually open to negotiating. While everyone else is stepping away, we're stepping in. If you're looking to buy right, not just buy fast, this is your edge. Calvin Realty. Opportunity doesn't take time off.
Sure don't.
Okay, so listener question was emailed in. It says, "Hi, Wayne and Gabby. I have a question that I'd love if you guys could answer on the podcast. I'm already at work by the time you guys go live on YouTube, so I can't make it to the live show. I have an investor partner lined up to buy a property with me, and I'm thinking of two scenarios that I'd like to get clarity on. What happens if my partner decides to back out before our deal goes through? And similar to that, what happens if they decide after we close on the property that they don't want to do this anymore? This will be my first joint venture partnership."
All right.
Thanks, guys.
And so I understand, they have someone that's interested, or they're just asking?
No, it sounds like they have somebody lined up.
Okay.
Yeah.
So this is broken into a two-part. What happens if they decide they want to back out before they do the deal?
Yes.
And what happens if they decide they want to back out after they've purchased the property?
Yeah. It didn't specify like at what point. I don't know exactly what's going through their head, whether it's like we bought the property and like, oh my God, what have I done? Did I want out of this? Or if it's like down the road.
Okay, not a problem.
Yeah.
And
I think the answer remains the same regardless, but
for sure. And this is what we teach. And so if you're ever going to do any creative deal structures when it comes to real estate investing, real estate investing can be super simple. You can just buy a property and put it, your listing on Kijiji and rent it out and find some lease agreement and rent it out, find some lease agreement online and whatever. Buying a property and putting a tenant in it isn't very hard. Anybody can do it. But doing it right and taking it to the next level and scaling and raising money, that's where you're getting into more complicated creative strategies. And when it comes to that, I do not recommend it without proper education and proper guidance, because you're going to fuck it up. Or you're going to slap it all together really loosely, and then somebody's going to back out of your deal after you purchase the property, and then it's just going to be catastrophic.
messy, messy, messy.
Very messy. You get lawyers involved and all that other, and then you start losing money and people hating each other, and then you go from being, a friend or a family member, it turns into your worst enemy because you didn't know what you were doing and you didn't set it up properly. I am getting a little, maybe I'm over exaggerating a little bit, but
A little bit of drama.
I'm sorry, Gabby. We've been around for a very long time. How many other people have you seen with joint venture agreements and partnerships going absolutely fucking sideways?
Yeah.
People that used to be best buddies at networking events, they won't even show up to the same events anymore because they can't stand to look at each other. We had one.
Yeah, it happens.
We had one. One where the other partner didn't do what they were supposed to do, and it got incredibly messy.
Yeah.
Right?
Yeah.
We had to uphold our end. So you gotta make sure that what you set it up for success. Okay. Now, before we go any further into this, I mean, there's some people that are maybe new to this real estate investing game. Maybe they don't even know what a joint venture is, or maybe they don't know what raising capital actually means. Some people would just assume that you're just going to say, hey, who's got money? They give you the money, and then you pay them something for it. Maybe you pay them interest on it. That would be more of private lending. Private lending is when you would borrow money and you would pay a fixed interest rate, for borrowing that money. What we're talking about is partnerships, joint venture partnerships. And joint venture partnerships are a little bit different. That's when somebody else will bring the money and the financing to purchase the property, meaning they will bring the down payment and the mortgage to purchase the property, and you will bring your expertise. And so when you've run out of money or you've run out of mortgages, finding somebody else who can get the mortgages that you need, the good financing, and bring the down payment and any additional funds for renovations or reserve funds, et cetera, can be extremely valuable to you. And then it's valuable to them because they get the opportunity to work with you. They get the opportunity to work with the guy or the girl, the expert, the real estate girl. She knows everything. She knows exactly what property to buy. She has all the team all set up. She's got the lawyer. She's got the mortgage broker. She's got the realtor. She's got the home inspector. She's got the handyman. She's got everything. She knows exactly what neighborhoods to buy in. She knows exactly what tenants to put in there. She knows exactly how to set up the lease agreement. She knows exactly how to set up the bookkeeping and to file the taxes to make sure she gets all the proper deductions so she's paying the least amount of taxes. She knows how to depreciate her asset using capital cost allowance to make sure that she's accessing more money which she can reinvest. She knows how to set me up with the Smith maneuver to make sure that I'm saving even more money on my taxes I can reinvest into those things. This girl is the girl. She knows her shit, and she knows exactly the different trends in the real estate market to know exactly when the prices are going to be the most probable to be at the highest, so we can either refinance that property and pull all of our equity out and reinvest it, or sell the property, take our profits, and invest it into the next deal. This girl is the girl. And someone who's got a little bit of money in a mortgage, or the ability to get a mortgage, would absolutely kill to invest with that girl and give her a percentage of the profits. Right?
Wow. She's cool.
She's the best.
That girl is you.
You're that girl. I hope somebody comes to the REI Masters bus tour.
With a shirt that says that girl?
With a sweater that says that girl. Fuck me, that's your next sweater. You've been looking for a sweater.
Yeah.
Gabby's been looking for, she's like, what's my catchphrase? You've got number one real estate investing coach. What am I, number 2? And she's like, I got cash flow. Wayne's got like, have you tried trying? Wayne's got the, do I look like a bitch sweater? Gabby's got no catchphrases. Now that's your sweater. You are that girl.
Okay.
She's that girl.
La 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 la. Okay, I'm gonna have it tomorrow.
Oh, wait a second. Carmen's.
Okay, Carmen's also that girl. You go, girl.
It appears I've misled Carmen. Uh-oh. I let her on.
I think she's that girl too. You know what? All the women
That girl
in
number
here
2?
are that girl.
That girl
No,
too?
whoever of you are coming to the bus tour, we're all gonna have that girl shirts.
I like
We're just
it.
gonna be like, what's happening?
I like it. I think it's a great opportunity.
Yeah.
Love
it. Anyways, where were we?
I know exactly where we are. I was just thinking about it. Just off on a side note, so many people, when they get into raising money and doing joint ventures, there's like, why would anybody want to do a deal with me? Why would anybody want to give up a percentage of their profits to partner with me? What do I bring? I'm not bringing any money. I'm not bringing a mortgage. I just know a little bit of things. Now, I try and tell people, I'm like, you have no idea what you know in comparison to them. You have no idea just how fucking extraordinary you are and amazing you are compared to everybody else. And you are amazing. And in any circle, I could plop you in any circle at any given time, in any neighborhood, in any building. And I promise you, you are in the top 1% of real estate experts in that room. I'm willing to bet I can drop you into a neighborhood. I can drop you into a city, and you're in the top 1% in any city. You know so much. You are that girl. But just people just don't realize what they're worth, right? Yeah. And they don't know how to share their worth and their value with other individuals. It's what I teach, right? See, the thing is, I know you're that girl. I clearly just fucking showed you that you're that girl. And I didn't prep that speech either. Have I ever done that speech before?
No, it was amazing though. I loved it.
Did I stutter?
No.
Did I trip at all? No. That's because I am so incredibly confident in you and your ability and your skills and your expertise. I just wish everybody else knew that. I wish that you knew that. I wish that you knew how amazing you are. And I think if you walked into a room like that girl, everybody would want to work with you, right? So that's joint ventures. The standard textbook joint venture agreement is 50-50. So the person who brings the money and the mortgage, they would get 50% of the profits, and then you would get 50% of the profits. So upon completion, I'll just make this really short and simple because I'm not teaching a joint ventures class or a course today. If you guys want, just reach out to me and I can help you out with that. But the standard joint venture is 50-50, meaning that the money partner brings all the money and the mortgage. You bring nothing but your expertise. You get 50% of the profits for being that girl. Having the assurance of knowing that that girl's got it all covered, that she knows the answer to everything. She knows everything, and whatever she doesn't know, she'll figure it out. There's a lot of assurance in knowing that you're partnering with someone like that. And so once the money has been returned, once the mortgage has been paid off and all the debt's been paid, and once the money partner has received all of their initial capital back, the remaining proceeds from the deal, the remaining profit gets split 50-50. And someone who's really, really good at real estate investing, I promise you those profits are going to be extremely high. And it's going to be an amazing return for your partner. That's how we purchase all of our properties. Yeah. We partner. Yeah. And people see the value in this boy.
And this girl.
This and that. Okay, so, but let's say you are, get back to the question. You're trying to do this now. You see the value that you bring. I can understand that there might be some concern that okay, I've done all the work now. I know exactly where we're going to be buying this property. I've mapped it all out. I've explained to them what we're going to be buying. I've explained to them how it all works. I've explained to them that this is a long-term partnership. We do it a minimum 10 years. And I'm ready to go buy it, but I don't want to go and do all this work, aggressively writing all these offers and negotiating and putting a deal under contract. And then my joint venture partner, my money partner, decides to back out the second we write an offer or after I work for weeks. because I don't like working for free. And I completely understand that. That's real estate investing. That's joint ventures. You're going to be doing a lot of upfront work for free, and you're not really going to see any of that money for, I mean, the way that I structure my joint venture deals, I don't see any money for years.
Yeah.
I do everything upfront for free. Everything that I've ever learned has been for free. I mean, that's the value that I bring to the deal, but when I go out and look for the deals, like I was looking for deals the other day, when I'm working with my realtor, trying to figure out how to get it all set up, when I'm writing offers, when I'm doing all the diligence and doing the home inspection, when I'm going through, condo documents and property inspections, when I go back to the property again to take pictures, when I go and we do viewings to show it to tenants, when we put the rental listing together. I mean, everything from start to finish.
When we set up bank accounts and utilities.
The amount of hours we put into it, and not a penny goes into our pocket until we sell the property later, 10 years later. I can understand that a lot of that can be, leading up to it, it could be like, I don't want to do all this for free. How do I make sure that someone doesn't back out of the deal? Let's talk about before we do a deal. You know what, to be honest with you, you said earlier, and I'll just say this as well, that there's not much of a difference, to be completely honest with you. I mean, the answer is exactly the same, but I'll break it up just for the podcast.
Well, I think before and after the answer is different. What I meant was once it's in the after, it doesn't matter if it's right after or if it's 5 years down the road. That's what I meant, that it's same.
Right.
Yeah, I do think there is differences if the deal hasn't gone through yet versus it has.
Mm.
Yeah.
Just a quick side note. Carmen is in the chat. She says, I'm looking for my next joint venture soulmate. I love that.
It's a little cheesy.
I love it. I love it. So the answer is just like any soulmate or a good, strong relationship. Good, strong relationships are built on communication.
Yes.
Right?
Yeah.
I like to compare joint venture partnerships to marriages, to long-term relationships, because the partnership that you're going to be getting into is long-term. You're signing, something that says that we're going to be in this partnership for 10 years, maybe more, right? And I want you to look at every relationship you've ever been in. How many relationships have you been in that are longer than 10 years? You're about to sign on the line that says that you're going to be, committed to this person for longer than most of your relationships that you currently have. So you got to make sure that you're choosing the right person, and you got to make sure that you set clear expectations of what you want from this relationship, right? They should know everything about you and what it is that you expect, and you should know everything about them and what they expect, right? So communication is really important. I know I'm being a little cheesy and kind of cheeky, kind of comparing it to marriage, but it's...
Well, you should also have a prenup.
We'll talk about...
If we're going to compare
We'll talk about the joint venture prenup in just a minute. I'm going to rename that in our joint venture course. That's good. I like that. Mark that down. So you really want to make sure that you guys are very clear about who it is that you are and what it is that you're expecting from all of this. And so you need to have a good conversation about something like that. And what we've developed in our joint ventures workshop, which is part of the REI Masters Mentorship Program, is we've developed the joint ventures worksheet. Very popular, very, I'd say it's one of the most used documents that we have in the Masters Vault when it comes to raising capital. The joint ventures worksheet is built specifically for going through all the tough questions. And not all of them are tough, but just the questions that you're supposed to have, that you should have before you get into a joint venture partnership with someone. Making sure that you are asking all the right questions and making sure that you're getting all the right information to determine if this deal is right for everybody involved. And very similar to almost like a prenup, these are the questions and things that you want to talk about before you go and sign the marriage certificate, right?
Yeah.
So how long is this deal going to be? How many deals have you done before? What are you comfortable with? What happens when somebody wants money? What happens? Are you going to be getting insurance on each other? That's another, life insurance. Some people get life insurance on their partners. Are we going to do, have you done criminal record background checks? all of these different things that you should be asking, things that you should be bringing up to both, they should be asking you and you should be asking them. Sometimes they don't know the questions they should be asking you. And maybe it's weeks into this when you're looking for deals, they realize, oh shit, I never asked them this question. And then they ask you that question, and that's what the deal all falls apart on. Mm-hmm. So if you bring up all of those questions, the things that they should be asking you, it's going to help them remember and understand what they should be asking, and might actually even inspire them to ask more questions they didn't even think about.
Yeah, I find that investors who see this and go through this for the first time are kind of like, oh, this is awkward. I don't want this to be the reason they back away because we had to have this like tough conversation.
Have you ever gone bankrupt before?
Because we ask these tough questions and it's like, oh, well, I didn't know that. Now I don't want to do it. So the investor's almost like, I don't want this to kill my deal. But don't you want it to kill your deal before you get there? Like, don't you want to know this now rather than it come up later and kill the deal? Like, I would rather be on the same page and know, oh, okay, that wasn't my joint venture soulmate because we weren't on the same page about these specific things. Now I can move on and find the person who is my soulmate, rather than finding out either, right before the deal goes through or 2 years into it that, wow, we were really not on the same page and now we're in this gigantic mess. Yeah. Right? So it's like, you don't want it to kill your deal, but at the same time, don't you? If they weren't the person you were supposed to do the deal with, isn't that a good time to kill the deal?
That's right?
I mean,
it's a very good point. It makes more sense to kind of bring this stuff up now before you go and do all that work. Yeah. And not every partner, just because they say yes one time or they say yes initially, doesn't necessarily mean that they're the right person for you, mm-hmm. right? We're talking about a soulmate here. We're not talking about just a weekend club fling. You know what I mean? So having those tough conversations and exposing all of it out and putting it all out on the table gives both parties an opportunity to talk about what it is that they need, what they're expecting from all of this. Yeah. And if through that, everybody is still good, then the next document you're going to want to fill out. So that's the joint venture worksheet. Again, that's you get access to that through our joint ventures workshop. Of course, it's in the digital documents when you join REI Masters. The next document you're going to want to fill out is the letter of intent. Now, a letter of intent is a pretty standard contract in most business dealings. And a letter of intent is a non-binding contract, meaning that both parties are going to sign this contract or this agreement. However, it is non-binding, and it clearly states in there that it's non-binding. So, like, you can't bring it to the lawyer later on and be like, they said they were going to do this deal. It's a letter of intent. It outlines
our intentions
It outlines your intentions for the deal. And the purpose of this is after you've gone through the joint venture worksheet and you've established everything that you guys, all the right questions, and you've asked everything and you've gone through it all, now you guys can clearly outline all of your intentions of working together, right? And as long as everybody's in agreement, you will write down those intentions of what it is that you're doing. We are going to do a deal and it's going to be a long-term buy and hold for a minimum 10 years. So-and-so is going to bring the money and the mortgage. I am going to bring the expertise, my team and everything, list off all of that girl. And then also, if in the event that something like this is to happen, this is what happens. And you just mark everything that you guys find to be important from that discussion. Don't write everything out because there's a contract for that later. But everything that's important that you think it needs to be written out, write it all out, and then both of you guys sign it. So this way, there's no like, oh, I didn't know it was 10 years. I thought you said 5 years. This way, it's very clear you guys have gone through it, you've written it down, and you've signed it. So everybody is like thoroughly gone, like there's no mistakes, there's no confusion. Everything has been discussed, everything has been agreed. Now I can feel confident as the expert or as the managing partner that I am going to go out now and I'm going to do the work that I need to do, knowing that everything is out on the table and we've had this discussion, right? And there is such an incredibly low probability of someone backing out after this point because you've already gone through everything. Yeah. There's nothing hiding underneath the rug or behind the curtain. It's like, oh, I didn't ask them this, right?
Yeah, you've gone through all of the what ifs and how you're going to structure it and what to expect and everything.
Exactly. Exactly. So the letter of intent is a non-binding contract where everything is outlined, all the intentions, and both parties sign it. Okay? What's going to be next is the joint venture agreement. Now, just normally the joint venture agreement isn't done until after, much later on. I'm not going to get into all of that because it's just too much for today's episode. But we can teach you all about joint venture contracts and how to fill those out and how to get it all done. I would recommend getting it done by a lawyer. But what you're going to do is you're going to take all of the information that you got from your joint venture worksheet and you're going to plug it all into your joint venture agreement contract. The contract is binding. The binding contract, the joint venture agreement, is what holds both parties accountable in the event that they don't do what they say they're going to do. So typically this doesn't happen until after the property is purchased, but the letter of intent, to just start off, if to answer the first part of the question, what if they back out before the deal? The letter of intent is not a binding contract or some sort of a tool that you can use. It's just making sure that you guys have had all the right conversations beforehand to prevent or eliminate the risk of them deciding to back out beforehand. There's really nothing you can do to stop them from backing out, except making sure that you have good, transparent communication with them to make sure that all of their concerns have been heard and understood, and you guys have figured out how you're going to do it. Okay? That's how you prevent it from happening before you get the deal. Now, after you've done the deal, it's a little bit different and much messier.
Yes.
I mean, sorry, my nose is really itchy.
Mine too.
Before the deal, it sucks because all you're going to lose is time.
Yeah.
After the deal, now you've got a deal, written up. You own the property. That's when things get messy because as soon as you own the property and you try and sell it, now you have something to lose, which could be money. You know what I mean? That could be not only lose all your time, this deal could lose money as well. And it just takes more time kind of trying to terminate things. Lease agreements are involved and, you got other contracts you might have committed to with other trades. And then, now you're trying to liquidate this property too, trying to sell it and not take a loss. It can get incredible. And then just all the time involved with all of that as well. You really don't want to be in a position where somebody backs out after the fact. So that's why your joint venture agreement, your joint venture contract is what protects you from that, making sure that you are made whole in the event that someone decides to not do what they're supposed to do. The joint venture contract ensures that you're made whole. Make sure that you are, what happens if, it will literally say, what happens if someone backs out, right? And it will be covered in that joint venture contract and be reviewed by lawyers to make sure that everybody understands what happens. And then you can take that to court and file a claim in the event that you're owed something and you should be made whole. So again, I think that to prevent it from happening, clear, transparent communication is the most important thing to any good marriage and to any good joint venture partnership. Making sure that everybody understands what they're supposed to do, understands your feelings and what you're expecting from all of this, and it's all clearly defined and written out and signed. Okay, so make sure that that gets done. Now, I really don't know in what circumstances somebody would want to back out. I mean, do you have any ideas? Or depends on the deal, but let's just keep it super simple and just talk about buying a cash flowing long-term buy and hold. Cash flowing property, rental property, long-term buy and hold. I mean, what circumstances would a money partner want to back out?
Yeah. Well, in this case, in this email, it just simply said, I think it said, I'd have to toggle my phone, but I think it said they changed their mind. So in what circumstance would they change their mind? I think really if their financial situation changed. Either, they lost their job or they're moving or something, and they feel like by selling this property, they might get their cash back and be able to, So the most one that comes to mind is that financial situations change and they want their money out.
Yeah. Okay. And in that case, I mean, there could be a million different scenarios, and I would have a million different answers for how to handle each of those scenarios. And that's more of something that we would cover in our mentorship program. This is something that we cover on a weekly coaching session. You know what I mean? Hey, this person wants to back out. How do I handle this situation? That's the guidance that we provide through coaching. But I can't answer a million different scenarios. I know how to, but I can't do it today on, not every podcast. So I think just for that example there, I think that would be something that would be brought up during the joint venture worksheet.
Yep.
And that would be something that's clearly explained and understood by both parties, that we are doing this for 10 years and that they're in my contracts, I actually don't allow for much flexibility.
Yeah.
And I explain that to all my joint venture partners on day one. You know, if they ask the question or whether they don't ask the question, I say, I just want you to understand that this is a 10-year arrangement and that I want to see this through for 10 years. Unless, of course, a tremendous opportunity presents itself for us to sell the property. And, you know, because the market's really high, and I will have that discussion with you and we will unanimously determine whether we end it or terminate it early, because it needs to be unanimous. Otherwise, we're going to see this through all the way through the 10 years, because in order for this to be profitable, there's a reason why I choose 10 years. It's because the money is made in the long term. That's where the mortgage gets paid down, you know, after the 8-year hump. That's when all of the appreciation starts to build. I want to make sure this is as profitable as possible before we sell it. And to ensure that, I need 10 years. So I need you to understand that, like, if anywhere along the way you think that you're going to need your money out or you're going to be canceling or something along those lines, then I don't want to do this deal. Because I'm doing this deal for it to be successful. I'm doing this deal to make money for you and also to make money for me, because I don't like to work for free. So I just need you to understand that there is no backing out midway or like, hey, I'm going to sell my interest in this to somebody else. I've decided to work with you. I've decided on this property and I've made that decision, and a decision is final. And when I make a decision, it is absolute and it is final. So we're going to do this deal. Do you foresee any issues of that changing? And if they say, well, you know, what if this happens? Or what if I get sick and I need the money? Then I will say, if you can't commit this money for the full 10 years, then we shouldn't do this. If you feel like there's a potential you might need that money, then don't do this, because you're not in a financial position where you can make this full commitment. I need someone who's fully committed. So I'm going to leave this with you. I think you should go back and think about this, because if you can't fully commit to this, then I can't commit to it, because I don't want to be in a position later on down the road where something terrible does happen to you and you don't have any money and you come to me and I'm sitting here trying to enforce my contract because it's my rights. I'm going to be the asshole. I'm going to be the villain. You're going to be sitting there and your wife's going to be on her deathbed and you don't have any money, and I'm going to be like, you signed the contract, buddy. I'm not giving you your money. You really want to put me in that position? That's not fair to me. So I want full commitment from you. And if you don't feel like, you know, you can fully commit to this, then I don't want to do the deal, because I don't want to be in that position. I don't want us to get into an argument and a debate about this. I don't want to have to bring in lawyers. And ultimately, I don't want to ruin our relationship over this deal. In order for this to succeed, I need to make sure that you are fully committed to this, because the last thing I want is for us to lose money and lose our friendship, right? That's way more important, is making sure that we preserve our relationship. Okay. So let you think about that. If perhaps maybe you determine that, hey, maybe investing this much money isn't in my best interest, I can't financially do it, then let me know how much you can invest, and we can kind of tweak things a little bit to make sure we buy a different type of property so that you're not stretching yourself too thin and putting yourself in that position. That's how I would handle it. I would not do the deal. Now, Gabby mentioned this earlier. So many people will just kind of push it through because they don't want to lose that person that said yes. I worked for so many years getting someone to finally say yes, and here I am telling them I'm not going to do the deal. That takes a lot of strength and a lot of courage, because I know how hard you worked for it. I know how hard it is to get a joint venture partner. Trust me, I know. I was there when I started. I remember I started one day too, right? Just like you, you know. I didn't have as many joint venture partners as I have now, and I don't have the ability to and the confidence to be able to do it like I do now. I know how hard it is, but I also know that it's not worth the risk. Not worth the risk of potentially having this deal fall apart and having that relationship fall apart and getting lawyers involved. It's not worth it. It's so incredibly messy.
Yeah.
So you got to be strong, and you got to have the courage to be able to say, hey, this person isn't right.
Yeah.
And I just need to keep on looking for the right person to find that soulmate. Right?
And it'll be worth it. Like, once you get there and once you find that person who's on the same page as you, it might not be the first person that says yes. Maybe you determine somewhere along the way that was like, oh, okay, we actually, I think you need to change your mindset around it. Like, oh, okay, I dodged a bullet. because that would have ended messy. We weren't on the same page, right? But once you do find that person who understands and gets it and says, yes, no, I understand, that makes perfect sense, and that's what I want too, then like that is the soulmate, and that's how you're going to build that really nice portfolio that you've been dreaming of building and trying to make work for all these years.
Yeah.
That's when it starts to happen, right? And that's when it's going to be profitable because you're able to see it through, right? Yeah. And that person is going to see the value and is going to want to do more business with you.
Exactly.
Yeah.
Exactly. And I know it sounds kind of cheesy, and I know that we keep repeating this over and over and over again, but it's all about finding the right person. Yeah. And it's very similar to a marriage. You don't just you don't marry the first person you sleep with. You know what I mean? Like you got to make sure that they check all the boxes. You got to make sure that this is going to last, and they have to be right for you. And it's very similar with joint venture partners as well. You got to make sure that checks all the boxes. Otherwise, you're just going to get messy. Yeah. Or you have to find that soulmate. Yeah.
But at the end of the day, to answer the question, is that things can still fall apart. You guys can be on the same page leading up to it. You can have asked all the questions and done all the things and gone through with purchasing the property and still find yourself in a situation down the road where they do say, I want out of this. Right. And in that case, this is why we talked about all the things that we talked about leading up to this point, is that you do have a contract in place that goes over all of these what if this happens. And now that you've found yourself in one of these what if situations, you have a contract to back you and to say, well, no, or if this happens, this is what's going to happen. This is how it's protecting me, right? Yeah. So that contract is so important. And we have seen some horrific joint venture contracts that people have sent us and said, well, this is my agreement. What do I do? And it's like, well, that is the shittiest agreement I have ever seen. And I'm sorry, it's not going to do much for you. Yeah. So the proper agreements, the proper conversations, all of this is so important to have in place to protect yourself when these things inevitably might happen, right?
Ultimately, that is the last line of defense, right? So good proactive measures and making sure that you have open communication is obviously going to help prevent these situations,
yes, we
making sure that
prevent.
It's documented. Yeah. Prevent. And then the last line of defense is your contract. Yeah. And remember that a contract is only a piece of paper. You can't really do too much with it. This is a thicker, piece of paper, so I might be able to hit them and give them a little bruise. But a thin, 20 pages or 30 pages isn't going to do very much other than just kind of like, maybe blow some dust in their eyes. That's all you can really physically do with it. In order to enforce a contract, you're going to have to hire a lawyer, pay a retainer, go to court. It's messy, but it is your last line of defense, right? So making sure that you have the right contract that outlines everything clearly will probably prevent you from having to go to court because it's clearly defined in all of there exactly what everyone's responsible for. And then if you need to take it one step further and go to court and make sure that you get what you're owed, then that is obviously the last thing you could possibly do. Mm-hmm. But, making sure that you get the right contracts, as Gabby said, covering all of the proper clauses to make sure that everything is properly covered. And we have, I think, 4 or 5 different joint venture not drafts, but
samples.
Yep. Samples, like we have simple ones, we have, more advanced ones, we have basic ones, we have easy to read ones to make sure that, you have a template. Was what I was looking
templates,
for.
Yes.
You have the right templates to start with so you can start filling it all in and then you can hand it off to your lawyer. I mean, these templates are worth thousands of dollars because they've already been drafted up. What you do is you take this template, you plug in all the information that you already have from your joint venture worksheet, and then you hand that off to your lawyer and say, hey, take this, put it into this, and then offer any tweaks, based off of what I want in it. It's going to save you thousands of dollars. And we offer that up in the REI Masters Mentorship Program. So if you guys are interested in learning about finding your soulmate, finding the right joint venture partner, and then getting the right documentation and contracts and paperwork in order to make sure that it's completely sealed and there's no holes in it, reach out, book a discovery call. We can gladly help you with all that stuff. Thank you so much to the investor who wrote in the question today.
Yeah,
a terrific topic, something we haven't talked about in I don't know how long. Yeah. And if you guys have any questions that you want us to cover for you, you want to get access to free coaching, keep joining us live every weekday morning at 7 a.m. on YouTube. Or if, you're listening to the show afterwards on YouTube or Spotify or Apple Podcasts, and you got a question, email us at info@reimorningshow.com. We'll answer your questions. We'll give you that free coaching. That's today's show, guys. See you guys all tomorrow.
Bye.
Thanks for listening. Want to be coached personally by Wayne and Gabby? Then you should join the Real Estate Investing Masters Mentorship Program. Details are in the show notes to get started.